Today, we're going to learn about what's happening with the S&P 500 and the Dow 30, how that's going to impact the stock market. And the last video I did, which was about the US 30, got a great response and great comments and a lot of action. So if you want to check that one out from last week, the link will be below in this description. But today, I'm going to go into the S&P 500, the US 30. You're going to know exactly how to trade it, how to benefit from what's happening in the market. And right now, I am looking at a drop in the market. And I'm going to explain all of the details, so make sure you pay attention to the very end, because there's going to be some profit opportunities for those people that are prepared and aware for what's going to happen into the market. So let's go ahead and jump right in. Now, first thing I want to notice here, this is the US 30, right? This is the US 30. And the very first thing I want to point out is that we are going sideways, right? That's the very first thing I want you to realize, is that we're going sideways right now. Now, the 200 period moving average, which I put on the chart to help me identify the trend, is pointing up. That is true. But if we look at the overall market for the last few months, you're going to see that we've been going sideways. Let me show you what I mean by that. So we're going to draw this box here, and this box is a sideways representation, and we are flat. And so with that being said, when you have a period of uptrend, before you get the drop, before the market reverses, you then have a corresponding flat consolidation period. And so what's happening now is that we are getting closer to this 200 period moving average. So we want to be paying attention to that. So we had a high right here, and then we had a failure. So we have that failure, and then it came back up, and then we had another failure. Okay, and this key failure is very important. I have a 20 period and a 9 period moving average here. This is a 9 EMA and a 20 SMA. And you'll notice that price tried to break out, and then it failed. And at this point, this is when I took the short, which was right here because of this failure. I took a short trade right here because of this failure, and you can see that the market kept on going. Now, this 200 period, I believe, is going to get tested. I believe this average is going to be tested. So over the next couple days, we're going to see it come up here. That's what I believe. I obviously, disclaimer, I don't know what's going to happen. I can't predict the future. Trading is risky. Always, always, always manage your risk. But I think that we're going to get a test here. Now, I also think that we're going to test the bottom of this box. But the key question, the key thing that we need to look at is what is going to happen with when it gets down here. Is it going to break to the downside, or is it going to pop back up? Normally, with this current uptrend that we've had, normally when it goes down, it breaks out. You see how we go down and we break out. We go down and we break out, right? It just keeps following that pattern. We have all these breakouts to the upside and then a new high. This time, however, this time was different. So when you see a pattern begin to change, something different happened. This time it didn't break out, and now it is looking to make a new low. And so when that happens, it's going to probably come up. And is it going to make a new high, or is it going to break lower? So if we look at this trend line, if price comes down here and then comes back, what we're going to want to look for is a price action signal, a pin bar, a failure, or some kind which shows that we're heading lower. Now, I'm going to break this down now. Let's go out a little bit further. Let's look at a weekly chart, right? A weekly chart will give us an even better indication of what we're looking at. So what I want to see on the weekly chart is a failure. This is a price action pattern that I've taught a lot, and it's helped me out in trading a lot, but it's this one, this candle. If this fails, that is a great price action signal, which I trade often, which is going to say that price goes lower. So if this weekly candle, this particular candle fails, and we get a close below, look for price to then make another move lower. Okay, this price action signal is very important. And remember, this is a Thursday where I'm doing this. This is going to happen tomorrow. Well, the break isn't going to happen tomorrow. The weekly candle is going to close tomorrow. So we have, it tested it once, it tested it, and now we're getting a failure. And when you get the failure, that is a great buy signal or sell signal. Now look, here's a perfect example. We had a pin bar and a failure right here. You see that? Pin bar, failure, and what happened when the failure happened? Price kept on going up. And when we get the failure on the downside, then we could expect price to keep on going down. So just my personal bias right now is that we're going to go to the downside. And that is because of this candle. Because the moving averages are beginning to cross. Do you see that hint? The moving averages are beginning to cross. When was the last time that happened? Let's go back and see when was the last time it happened. The last time the moving averages crossed was all the way, you can see it, it was all the way back here. This was the last time it happened. Right here was the very last time that the moving averages crossed. Right there. Okay, and so you can see what happened the last time. What happened the last time, and I'm not a big person on news. I just believe that the candles will tell us, but there seems to be a lot of things happening in the news. Usually what happens is when this candle is lower, people start trying to find reasons why. They work together, the news and the charts. So they're going to be like, okay, what's happening? So it tested here, didn't break. Now it broke. We've got a moving average crossover. We have this candlestick. There's lots going on that's showing that we could have a reversal. Let's look at this monthly candle. Right, this is a big bearish monthly candle. It broke this low, and if we keep going, it's third. So it's taken 2 months out. And if we get a strong break, we could move lower. And the last clue that we're looking at here is where could this go? Let's look at a 4-hour chart. You can see the 4-hour, it's below the 200 period moving average. Price is dropping lower, and it's everything's pointing down right now. So let's go back and let's go up to a weekly time frame and look at where could we go. Well, I think if we break outside of this box, I think we have an opportunity to get right back over here, which is the 31,455 level, 31,455. I think that we could get there. And let's take a look at the Fibonacci. What does the Fibs tell us? Oh, isn't that interesting? I'm not joking. I did not plan this out, but the Fib level is the exact same place as where that resistance point is. And that's the 23.6 Fib level. So there's a possibility if we get back here that we could go back down to that level. And then if it breaks that, we're looking at the 38.2. So right now, things are not looking good for stocks. Another thing that you want to consider here is that when the stock market starts to drop, a lot of people begin to panic. Fear sets in and a lot of people take their money out. Not everybody is a trader. If you're a trader, what usually happens is they're like, okay, my money's going to go out of the stock market and I'm going to put it into something else. So you can look and see where the other money's going into. Is it going into gold? Right? So if we pull up a gold chart, which I just happen to have one of those here, we have a gold chart. You can see that gold had a very big day. Let me remove this this tool here to get you a better look. So gold had a very big day, and gold is sitting right on support. Boom, boom, and now we have a trend line developing on gold. A trend line developing on gold. So traders will move their money into the markets that they believe are going to go up, because a trader wants their money to be active all the time. So that means that when the stock market is going bad, they're going to try to find a place that their money is going to make them money. And so one thing that they can do is go into gold. So if you can see that this gold chart breaks, then gold could go up to the top of this box, right? Gold could make a move all the way up to the top of this box, which is a big move. That's 1833. That is right. Gold's trading at 1750 right now. Gold could go at the top of this box, and you can see we actually are in a big sideways box here for gold. It could come right back up here. And of course, as I said with the stock market, I don't know what's going to happen. Tomorrow, we could get a big pin bar, and then we could be down here. I don't know. But I do know that with people taking their money out of the stock market, they might be putting their money into gold. And so one of our jobs as traders is to say, okay, market's leaving one area, money's leaving one area, and it's going into another area. Another thing we want to consider is that not everyone is a trader. So a lot of people will be pulling their money out and putting it on the sidelines. They're like, okay, we've had a good run. If you're holding a retirement account and you're getting close to retirement, or you have a 401k or something, a lot of those people will be closing and pulling the money out of the market. So the last thing I wanted to look at, which is the S&P 500, and it's very similar. The S&P 500 is pushing these lows right here. Look at this. It's pushing these lows. So if this breaks on the S&P 500, I would be very interested in taking a short. I took a short trade right here this morning on this, and it worked pretty well. I was waiting for that to break. So just like I said, that fake candle, this little mini pause, I call that a pause bar, that broke to the downside, and so I took that because it also bounced off of that moving average right there. That's why I took that. So this S&P 500, we're testing this low. This is a fractal. I have a fractal on my chart, which means a new level. The market likes to move in boxes, and so where could it go? I think that we could go to the moving average, or we could go down to the 4,000 level. So get ready for some volatility, get ready for some fear, get ready for a lot of things that could potentially happen. And of course, as traders, we want to try to make money wherever the money is going to be. So keep your eyes on other markets. Don't panic. Whatever you do, don't panic. Just manage your risk. Risk management is really important. And practice your trading. As you do this over time, you're going to get better and better. All right, well, that's it for today's video. I hope that this was helpful for everybody. I hope you guys got a lot of value out of it. If you did, please just hit that like button, and I would really appreciate a subscribe. But the most important thing you could do for me is ask me a question. What do you want to know about in the market? What are you seeing? I reply to every single comment. It's great for me to be able to engage with my viewers. That's the #1 reason I'm on YouTube, is to engage and have a conversation with the audience. So please leave me a comment. I would be more than honored to be able to reply to you. All right, and thank you. Hopefully you enjoyed the video.